Recently, there was a big announcement by Indian government. Indian government has advanced the target of 20% ethanol blending in petrol to 2023. This target was earlier set for 2030. Later, it was preponed to 2025. However, now the target is set to 2023, that is 2 years from now. This would require 1000 crore litre of ethanol in the country. After this news, the share price of Praj Industries came into limelight. In fact, earlier this year, in January, US-based Biofuel Digest ranked Praj Industries as second hottest company in the global bioeconomy in 2021 in low carbon fuels and energy chemical category. After that news, the share price of Praj Industry jumped 250% from 120 rupees to rupees 400. Hence, there is a lot of buzz around Praj Industries. So what is the business of Praj Industries? Will it benefit from the big announcement of ethanol blending by Indian government? What is the future of Praj Industries? Will it give multi-bagger returns in the next few years? Hello friends, my name is Sahil and this is my Personal Finance Academy where I explain everything about money management in layman's language. Recently I conducted a poll on which stock you want to pick for fundamental analysis and 37% people voted for Praj Industries. So here I am with analysis of Praj Industries. As usual, we'll start with understanding the business of the company, its product portfolio, its leadership, key strength, competitors, key risk, and future growth prospect. Then we'll look at the financials of the company to understand if Praj Industries is fundamentally strong or not. Then we will do the valuation analysis to understand if it is worth investing in company at current levels or not. But before I proceed, this video is only for educational purpose. The idea is to help you understand various aspects of the company so that you can make an informed investment decision. I do not provide stock tips. Also, I want to mention that someone commented in my previous stock fundamental video that the stock has already jumped and there's no point covering this stock. Well, the entire stock market is at an all-time high with Sensex crossing 52,000. When the market is at the peak, how can we expect good companies to be available at discounted prices? But that doesn't mean that the stock will only go up. You'll always get a chance to invest when the stock market fall or the share price fall. If you want to learn how to identify quality stocks along with every aspect of money management, you can explore my video course. Alright, let's get started. Established in 1983, Praj Industries is India's most successful company in the field of bio-based technologies and engineering with presence all over the world. With a humble beginning as a supplier of ethanol plants, today Praj is a global leading company with a boutique of sustainable solutions for bioenergy. It also includes high purity water, critical process equipment, breweries and industrial wastewater treatment. Praj business is mainly divided into three segments: bioenergy, engineering and high purity. Bioenergy segment include technology solutions for first generation ethanol, second generation ethanol, compressed biogas and biodiesel systems. Now ethanol is a very interesting product. It has three major applications. First usage is as fuel ethanol. It can be used to replace petrol and diesel. Second usage is as beverage alcohol, where it is principal component of alcoholic beverages like whiskey, rum, vodka, etc. Third usage is in industrial applications like paints, varnishes, perfume, pharmaceutical, industrial solvent, etc. Now, how is ethanol produced? So, ethanol is produced from feedstocks like sugarcane juice, sugarcane molasses, grains like corn, rice and wheat. Ethanol derived from these sources is termed as first generation ethanol. Second generation ethanol is produced from agro residues like your rice and wheat straw, canned trash, etc. Praj Industries has developed an innovative rain gas process technology to produce compressed biogas from solid organic waste as well as liquid waste. Within engineering segment, it includes your critical process equipment and skids, then brewery plants and equipment and wastewater treatment solution. Praj Industries has expertise in engineering to design to construction of breweries and process equipments. In fact, Praj is a market leader in brewery construction. The wastewater treatment division of Praj offers a comprehensive range of solutions for industrial liquid water treatment, recycling and zero liquid discharge to customers across sectors including metal, power, chemical, fertilizer, F&B, textile, pharmaceutical, etc. Third business segment is of high purity, that is an end-to-end solution provider to the biopharmaceutical, biotech, cosmetic, healthcare, etc. for application in production of products right from liquid oral to production of APIs, ointment, oncology formation, etc. If you look at the revenue breakup in FY21, Praj had a revenue of 1970 crore and out of that 62% was from bioenergy, 28% was from engineering and 10% from high purity. If you look at the geographical breakup in FY21, 74% revenue is from domestic consumption and 26% is from exports. If you look at the leadership, Mr. Shishir Joshipura is the CEO and MD of Praj Industries. Mr. Joshipura is a mechanical engineer from BITS Pilani and an advanced management graduate from Harvard Business School. Prior to joining Praj, he was managing director and country manager of SKF India Limited from 2009. In total, he has over 35 years of work experience. Overall on the company, its product portfolio and leadership, I would rate it 10 on 10. Praj Industries' biggest strength is its leadership position. Praj is one of the leading players in bioenergy solution globally. Praj is at the forefront of leading the future of transportation through its biomobility platform, which help address challenges such as greenhouse gas emission, air pollution, and associated health hazards. Second biggest strength is innovation. Innovation is the growth engine of Praj Industries. For example, Praj is setting up India's first batch of 4 commercial scale second generation biorefinery. This facility will produce multi-products such as ethanol, compressed biogas and fertilizers from biogas feedstock while managing the lowest energy and water footprint. It has been ranked number 1 among the best places to work in the Advanced Bioeconomy 2020 by Biofuel Digest, which is world's widely read daily in bioeconomy. Then some of the other strengths include experience management, diversified business and presence all over the world. If you look at the competitors of Praj Industries, in ethanol manufacturing, it is the first company to set up the second generation ethanol production in India. Within the engineering space, it has competition from companies like GMM Pfaudler. Then in water treatment, it has competition from NCC Limited and Ion Exchange. Overall on the competitive strength, I would rate it 9 on 10. If you look at the key risk, the major risk is that Praj operate in the cyclical capital goods sector, where demand is dependent on the capital expenditure cycle of its end user industries. Any slowdown in the growth prospect of end user industries would affect Praj's top line and its profitability. With increasing demand for cleaner fuel and an attempt to reduce dependency on crude oil, more than 60 countries in the world are at different stages of ethanol blending mandate. Praj Industries has carved a unique position in the world of ethanol technology by virtue of its expertise, which cut across a variety of sugar to starch-based feedstock, collectively called as first generation feedstock. Praj is one of the handful companies of the world to successfully develop and demonstrate second generation ethanol technology using agri residues. With its advanced solution for water conservation, Praj is ensuring zero liquid discharge and minimizing the water footprint for customers. To understand the future growth prospect for Praj industry, it is important to understand the recent development in the ethanol space in India. So India has high dependency on the oil import and it constitutes a major portion of its expenses. Moreover, it is a non-renewable source of energy and also pollutes the environment. In the attempt to reduce the dependency from oil, Indian government decided to blend ethanol with petrol. So ethanol is a biofuel and blending it with petrol would have 3 major advantages. First is that it would reduce the oil import cost by almost rupees 30,000 crore. Second benefit is that since ethanol is extracted from plant-based products like your sugar cane, it would benefit farmers, and the third benefit is that it would reduce the environmental impact. Earlier, the blending rate of ethanol with petrol was around 5% and the government set up a target of 10% blending by 2022 and 20% by 2030. Later, the government announced the revised timeline of 20% ethanol blending by 2025. However, recently the government has announced 20% ethanol blending by 2023. So in the next 2 years, the blending rate target is 20%. Just to give you a context, the current ethanol production in India is around 624 crore liters. However, in order to achieve the blending target of 20%, there would be a need of 1000 crore liter of ethanol. Praj Industries has bagged multiple big orders and the revenue pipeline is looking very strong. Recently, Praj has bagged an order from Godavari Biorefinery to set up India's largest capacity syrup-based ethanol plant in Karnataka. Praj has also bagged a prestigious breakthrough order from HPCL for setting up compressed biogas project at Badun in Uttar Pradesh. The project has capacity to produce 35,000 metric ton of rice straws as feedstock to generate 5,250 metric ton of compressed biogas annually. Not only this, as the manufacturing sector would grow, there would be strong demand in engineering sector like wastewater management. In case you want to learn in depth about the future growth, I have shared a link of a recent interview of Mr. Shishi Joshipura. It's a 1-hour video and would give you a very good picture of Praj future plan. Overall, the future growth prospect of Praj Industries is looking very bright. Hence, on future growth, I would rate it 10 on 10. If you look at the revenues, Praj Industries' revenue have been stagnant between 2015 till 2020. However, there is a recent growth in the last year. Its profit have been volatile. It decreased between 2015 till 2018. However, it has recovered from 39 crore to 81 crore in FY21. Overall, the revenue and profit growth is not that great and the profits have been volatile. Hence, on growth ratio, I would rate it 5 on 10. Praj operating margins are also very average. It is between 7 to 8%. The recent operating margin are 9%. If you look at the ROE and ROCE, both ROE and ROCE are looking average. ROE has fallen from 12% to 6%, then 5%, then recovered to recent level of 10%. ROCE is currently at 14.5%. Overall, the profitability looks very average. Hence, on profitability, I would rate it 6 on 10. If you look at the debt to equity structure, Praj is a completely debt-free company. Hence, on debt to equity, I would rate it 10 on 10. Company has a cash equivalent of around 132 crore by March 21. If you look at the shareholding pattern of Praj, latest shareholding of promoter is 32.91% and it has been consistent over the past few quarters. FII have 11.61% shareholding, although they have slightly reduced their stakes in the last few quarters. DII hold 15.21% shareholding. They have also slightly reduced their stakes from Praj. If you look at the valuation of Praj, Praj share price was stagnant between 2016 till 20. However, after the lows of Rs 52 on March 20, the share has zoomed to the level of Rs 400. But recently, the share has corrected around 10% and is trading at level of Rs 358. At current levels, Praj is trading at a P ratio of 81. Now that is a problem. The valuations are looking expensive. Yes, I agree that there is a bright future growth prospect, but everyone knows the same. Hence, that future growth is already captured in the current share price, which has made the valuations expensive. Hence, as an investor, if you are planning to invest in Praj Industries, then better strategy would be to make a small entry, and if there is a future correction, then you can consider buying it. Overall, if we conclude, Praj is a fundamentally strong company and it is involved in the exciting business of bioenergy with bright growth potential. In the next few years, due to increase in usage of ethanol, Praj would benefit from it. It is a very innovative company and has got leadership position in business of bioenergy, engineering and water treatment. The management of company also looks solid. Overall, there is a bright growth prospect for Praj Industries. However, there are few negatives. Its historical financial data suggests that the profitability of the company is very average. It is mainly due to its capital intensive business. On top of that, the valuations of company are looking expensive at a PE of 81. As an investor, you can certainly consider investing in Praj, but try to invest in the form of SIP or buy on dips. So in this video, we discussed the fundamentals of Praj Industries. I hope you'll find the analysis useful. I will see you with another video. Till then, take care.